AI and semiconductor stocks rose in 2023, including AMD, which rose by 112% last year, more than doubling in price. In fact, all of the biggest semiconductor companies rose on Friday, January the 19th of this year, when TSMC came out with good financial results, leading many to believe that there will be an upswing in the sector. And on Wednesday the 24th, AMD gained 5.86% in one day because of a couple of analysts' ratings. Does that make AMD a buy in 2024? Let's get into it. The reason for the turnaround at AMD is mostly due to their experienced CEO, Lisa Su. She took a stock in a moribund company to one that is second to Nvidia in the GPU market and one which is also second to Intel in the CPU market. To find out whether AMD is a buy, we will look at 4 determining factors: AMD's leadership and recent stock history, the plan for AMD in 2024, what the analysts are saying, and then find out what the final verdict is. A quick history. From 1986 to about 2016, 30 years, AMD was less than a $10 stock for most of that period, just barely surviving. It had agreements to manufacture some of Intel's x86 chips that helped it survive and acquired ATI in 2006 to start making GPUs. In 2014, Lisa Su took over as CEO. She had experience with another semiconductor company as well as an educational background of being an electrical engineer. She gave new focus to AMD with the Ryzen chip. The stock took off in 2017 with the launch of Ryzen, and by November of 2021, AMD hit $147. 2022 was a bit of a down year for AMD, Intel, and Nvidia because of supply chain issues. But AMD stock recovered in 2023, and this year it is up 30.13%. AMD has 2 business segments: computing and graphics, which focuses on processors and graphics cards for PCs and gaming consoles, and enterprise, embedded and semi-custom, which focuses on servers, embedded systems, and custom chips for clients such as Microsoft, Sony, and Google. Lisa Su's master plan seems to be to compete with Intel and Nvidia in the AI and CPU market, and to compete with Nvidia in the GPU market with their newly released chips. Recently, AMD has announced several new chips across its desktop, mobile, and AI-focused product lines. These chips will compete with Nvidia and Intel in 2024 and beyond. The new chips include the desktop Zen 3 chips, the Ryzen 5 5600 GT and Ryzen 5 5500 GT, which are part of the 5000 GT lineup. These APUs combine Zen 3 cores with AMD Radeon Vega integrated graphics. The Ryzen 7 5700X3D. This chip is designed to offer improved gaming performance, especially in titles that can leverage larger amounts of L3 cache. The Ryzen 8000 series, which will utilize the new Zen 5 architecture and include Navi 3.5 graphics. These processors will offer significant advancements over the existing Ryzen lineup. The Ryzen 8040 and Strix Point NPUs. AMD has announced the MI300 chips for AI training and the Ryzen 8040 mobile processors to be integrated into laptops. The Ryzen 8040 series offers enhanced AI processing performance, improved video editing capabilities, and faster gaming experiences. Additionally, AMD has revealed that the next generation of its Strix Point NPUs will be released in 2024. Ryzen 7040U series laptop chips. They are designed to offer improved performance and efficiency for portable computing devices. AMD heavily invests in R&D, and the release of these chips are proof of that fact. The real money is in the AI chips and in the GPUs, so this is where AMD will have to be successful. However, Mark Zuckerberg said last Thursday that by the end of 2024, Meta's computing infrastructure will include 350,000 H100 graphics cards. Those are GPUs from Nvidia. It's a solid contract, worth an estimated $9 billion for Nvidia. I haven't heard of a huge contract for AMD for their competing MI300 chips, although there promises to be some. Keep in mind, though, that during Lisa Su's keynote speech at CES 2024 at the beginning of January, she noted that the MI300 accelerators are all shipping today in production. They're already being adopted by Microsoft, Oracle, Meta, Dell, HP Enterprise, Lenovo, Supermicro, and many others. So, her action plan seems to be working. Where I may have some issues is when I look at the financials for the company, especially at the price to earnings and price to future earnings. The high PE compared to Nvidia seems to show that AMD is overvalued. When AMD's stock price comes down to a more rational PE, then at that time, it would be a good time to invest. Right now, it is overvalued. As well, the future PE of Nvidia is reasonable. But AMD's is pretty high for a company that needs time to make a dent into Nvidia's fortress. Nvidia is way ahead in all the fast-growing segments. For computer CPUs, Intel is ahead with about 70% of that market, but that segment is estimated to be growing at only 9% for the next few years. Meanwhile, for GPUs and any AI chips, Nvidia is way ahead with 80% to 95% of the market. And there are estimates that the AI segment is expected to grow by a compound annual rate of over 30% or more per year over the next decade. AMD, of course, is a highly innovative company, as are Intel and Nvidia, but the metrics are not yet right to make AMD a buy. As well, we need to see what happens with AMD's new GPUs, how good their CPUs will compete, how good their NPUs are, and how its ROCm platform will compete against the market-dominant Nvidia CUDA platform. On Wednesday, AMD shares extended their rally, jumping more than 5.5%, thanks in part to a wildly upbeat analyst report. New Street Research's Pierre Ferragu raised his AMD rating to buy from hold, with a $215 target price. That follows Tuesday's bullish call by Wedbush analyst Matt Bryson, who repeated his outperform rating and lifted his target price on AMD stock to $200 from $130. Ferragu points out in a research note that AMD CEO Lisa Su last year projected the market for data center artificial intelligence chips at $400 billion by 2027. Northland Capital Markets analyst Gus Richard, however, has downgraded AMD to a, in quotes, "heck if we know," rating in a note on Monday, January 22. AMD more than doubled in 2023, partly based on speculation that AMD can take market share from Nvidia with AMD's new AI-oriented GPUs. However, the hype regarding AI may be heading into irrational territory. Even if AMD were to double their sales in AI chips every year until 2027 to eventually reach $16 billion in 2027, the company would still only have about 13% of the market. Richard says that even with $45 billion in revenue by 2027, that figure is already factored into AMD's stock price. So, to invest in AMD, it would either have to have more revenue than that or its stock price would have to decline substantially. That is why I consider AMD a hold, at least for the next 2 quarters. As the stock has already gained massively since the beginning of 2023 and is starting to look overvalued. We need proof, in the form of large orders, to know if their GPUs are competitive with Nvidia's. Nvidia is the safer option because of its lower PE ratio and reasonable price to future earnings, as well as the wide acceptance of their CUDA platform as the industry standard. That's my recommendation. I will keep you updated. I know there is a lot of hype right now, and even though I am upbeat about AMD's future prospects with their release of AI chips and the MI300, numbers are numbers and the numbers don't add up as of right now. In any case, the earnings for Q4 of 2023 come out on January 30th, so we can see if they beat expectations. Subscribe if you don't want to miss out on important news about Nvidia, AMD, Intel and others. Thanks for watching.